So you've probably come across days exactly like this one where price just rallies all the way up with zero pullbacks, or it may rally all the way down with zero pullbacks as well. And you're probably wondering, how do I catch these moves? See, a majority of traders trade a reversal model, which means if they are bullish on a day, they want price to go to the downside first for them to find a reversal model to go to their daily bias, which is bullish. See, that's what a majority of traders get wrong. You want to have a reversal model in the market, but you also need to have a continuation model. See, price like this is really easy to catch if you had a simple continuation model. And in this video, I'm going to break down my simple continuation model that I have broken down many times across this channel before. So whether you're trading futures, Forex, stocks, it works across all different types of markets. I trade this personally on the futures market, trading NASDAQ only. But again, you can trade it on stuff like ES, Tesla, Nvidia, Apple, some things that I have on the side right here. So the three steps that we're going to cover today is going to be the daily bias, the fair value gap continuation model, and how to target the right draw on liquidity or a fixed point value of what I recommend. I'm not going to be breaking down my entire daily bias strategy in this video specifically. I made an entire video of my daily bias and what to find and how to find your daily bias every single time in the market in my last video. So if you want to go check that out and you want to learn how to find your daily bias every single time as well, then you can check that out. All you need to do is locate a fair value gap, wait for price to pull into the fair value gap, and then wait for a candle closure above previous candle highs or lows, depending on which side of the market you're looking at. So when price is moving up, and especially like today where price just exploded up, what we're going to be doing is locating a bullish fair value gap. So if you don't know how to locate a bullish fair value gap, I break it down all over this channel, but just to refresh your memory, we're going to pay attention to the first candle's high and the third candle's low. You don't want these wicks or the lowest or the highest points to meet or overlap. All right, what it's going to do is leave behind just candlestick bodies. All right, this is going to be your fair value gap. So you'd mark it out with a box, which is going to be this one right here. It's called the rectangle box on TradingView, right? All you need to do now is just locate price to come back into this fair value gap. That's it, right? You don't want a candle to close below the fair value gap because that's not what we're after. We're wanting price to obviously continue higher. And if you're following the narrative, you never want to buy high. You always want to buy low, and you never want to sell low. You always want to sell high. So in this instance, we don't want to just press buy if we see price going up. We have to wait for this candle to pull back into the fair value gap. That gives us our signal. Now, since there are a ton of different fair value gaps, how do you know which one is the right one? How do you know which one of these is going to be the right one for us to take a delivery out of? Well, this is where the next step comes in. So we have step number one, which is identify the fair value gap. We also have step number two, which is price to come into the fair value gap. But now step number three, all we need to do, right, is wait for price to close above previous candle high. Now there's one simple rule with this setup. You do not want this previous candle high, even though it gets closed above, to ever sweep past this previous high of this swing point right here or make equal highs before closing, right? That will eliminate the high probability that trades with this setup. You want it to close and leave a little wick without creating some sort of equal high or sweeping the swing point. If price does that, there's a very, very high chance of price returning back. Now, when price doesn't do this, there's an extremely high probability that price is going to run liquidity and target something like a higher time frame draw on liquidity all the way to the left over here. All right. Now, you're not specifically targeting that because that's going to be a very terrible risk to reward. All right. But when this setup occurs, it runs liquidity. That's the purpose. It continues with the trend. So whether you're looking at 50 different fair value gaps, as soon as you see one that has a candle closure above previous candle high without that sweep or equal high placement, then that is going to be the exact fair value gap that is going to work and deliver price in the direction it needs. That candle closure is the most important part. Now, in terms of stop losses, there's three different types of stop loss placements you can do. Number one is if price has a little candle low like this, you can put it underneath previous candle low. You can put it underneath the lowest candle that came into the fair value gap, whether it's this one or another one, the lowest price, or your safest bet is to put it underneath the bullish fair value gap or a bearish fair value gap, depending on what you're looking at. All right, so that is going to be the exact setup that we're going to be trading. So now that I've got the order panel up, let's break down and cover fixed point values. So what do I mean by fixed point values? All I mean by fixed point values is I'm targeting 20 to 60 points at most per trade. Now, the reason I do this is because price will move very consistently from 20 to 60 points before it experiences any sort of pullback, which means I can efficiently get to my entry, to my take profit, right, very efficiently without any pullbacks, giving me better clarity and obviously positioning in the market. So with this simple understanding for a 50K funded account, for an example that you might be trading with, right? If you were to get in with 10 micros and you risked 80 ticks, which is 20 points, you'd be risking $400, right? But now if you target, a set in stone criteria based of just literally just one to twoing your 20 points, so targeting 40 points, you'd be making $800 per trade. And on a 50K account for most firms like My Funded Futures or Apex or other firms that have consistency rules during funded stage, obviously you want to stay within and under the $800 threshold at least, right? So for something like that we're going to be targeting, that makes it very, very easy. So if you have a drawn liquidity that's 80, 90 points away, but you know you can't make too much in terms of consistency rule, you can just get out at a point-based value, all right? That's something that I like to do. Now, for my funded futures and Apex, I follow fixed point values. But for something like Take Profit Trader, where obviously I don't have a consistency rule and I can obviously have daily payouts, I like to try and maximize what I can make. So that's where my target and drawn liquidity comes from. It obviously is better to target drawn liquidity in the long term, or at least just whilst you're sitting there, even if you hit your take profit at a point value, just to sit there and try to analyze and obviously visually see it go to your target, because in long term, when you trade a personal account, it's going to become so much easier to use. So let's just briefly cover the daily bias, just very, very simply, right? I'm not going to go too much in depth with it, right? If you want to check it out, obviously you can watch my last YouTube video. I'll have a link down in the description so you can check that out there. But all we do coming into that, you can see 2 a.m. that is our London candle, right? At least our first London 4-hour candle. We came down and we swept last week Thursday's London low, and we also had this very bullish fair value gap right here on the 4-hour time frame, which we came into. Now, when we have double gaps like this in the market, price usually does not inverse double fair value gaps. It's very hard for it to do so, which should give you an instant confirmation that price is bullish, right? If we had a singular gap, right, we could expect price to maybe invert that, but since we had double, that is so much strength. And this is the first time price came into it, which made this an unmitigated gap, now a mitigated gap. So we're going to feel the full wrath and strength of this unmitigated, now mitigated gap. So coming into the day, pretty much we were just bullish immediately off that simple fact that price had double gaps and we should not inverse and go lower. In fact, we should obviously displace higher because it was an unmitigated gap. Now to jump down onto the 15-minute time frame, I'm just going to go ahead and skip close to the session because that's all we really care about is to what's closest to the session. So I'm going to go about 9:15 here, right about here. Next candle, let me go, next candle. All right, so coming into that, you can see that we did inverse these double gaps. Like I said, it's harder for price to inverse double gaps, but the fact that we did it right here on the 15-minute time frame showed that price is extremely bullish off that area, right? All we need to do is obviously just quickly mark out before we do anything else, our London highs and London lows, all right, and our Asia highs and Asia lows. So over here, I mark my Asia high and my London high from 7 p.m. to 2 a.m. for my Asia range, 2 a.m. to 8 a.m. for my London range. All right, so right here you can see off that bounce, we had clear London highs and clear Asia highs right here. All right, so those are going to be my two draw on liquidities that I like and will like to target today. Right, again, following that simple daily bias of just coming into that high time frame gap, all right, developing a little bit of narrative, which I cover in that video as well. All right, we can see a little bit of narrative. We have an inverse coming into the session. We're obviously holding this gap right here ever so slightly, this bullish fair value gap, the 15-minute time frame, right? So that means I'm pretty bullish in terms of targeting time-based liquidity. I don't care about these little external draws and liquidity too much. All right, I really pay attention to time-based liquidity because that is what drives the market. All right, so the next thing I like to do is obviously just see what price is going to do on a 1 minute or even a 30-second time frame. So coming into that on a lower time frame, you can see that we also swept these lows down here, and we also had this large bearish fair value gap right here, which obviously can look to be inversed. Now, with an immediate displacement higher, this is what I mean. We don't officially know price is going to experience a rally up or a rally down. Now, we can assume that price is going to get to these areas, but we don't know if it's going to get to that, with a rally up where we can't find any sort of positioning, right? And this is why it obviously takes to be some sort of continuation model into your arsenal, right? So right here, we create some sort of fair value gap. right? Some sort of pullback. Now, on the 30-second time frame, on the 1 minute, we also had a gap. Let's keep that in mind, right? On the 1 minute gap, we came back into it right here. We came into a higher time frame gap. So your anticipation is to either look on, I like to personally stay on the 30-second, but you can do it on the 1 minute if you want to. You want to look for a candle closure now above previous candle high. Now on the 1 minute, your opportunities are going to be very limited, but in terms of obviously finding on the 30-second, it's going to be very better, all right? More beneficial, more setups. Now you can see price came into that 1 minute gap, didn't come into that lower one. Again, we don't need it to come into that lower one if we have a candle closure above previous candle high. So right here, you can see that we had previous candle high. There was no wick on this, and we close above. That right there is our entry signal, right? We have double gaps, which makes it harder for price to inverse. We are very, very close. In fact, we are about 43 points away, right, from a London high, which is a very strong draw on liquidity, right? And we also have a higher time frame delivery from that 1 minute. We are obviously now having our signal, our entry signal with a candle closure above previous candle high, which means on the 30-second, we're respecting this gap, right? Which is perfect. And now we can enter right there. We can put our stop loss underneath, right? The lowest point of that gap right there, which is perfect, right? And all we need to do now is simply target London high or just trade it as a continuation model. For me personally, like I said, no idea if price is going to rally up. We can 100% try and see our luck all the way up to the Asia high like this, but all we have to do is just simply follow price. So you can see price right here keeps going up, right there, bang. We're able to hit our first target. Now, if you're not fully out of your position, right, and you're risking it to go to the next level, right, then this is something that you can do. Let's just say, hypothetically, you take out of your position, right? Whether you don't scale out of your position, which is what I'd recommend if you're trying to go for, a higher time frame target like the Asia high, right? But let's say you're out of your position, all right? Now you're looking for some sort of reversal, but price continues to rally up. So what do? All right, very, very simply, you don't take inversion fair value gaps to the downside when price is just pumping up like this, right? This is just manipulation legs. Right? So again, all you're trying to identify, is just a simple fair value gap retracement, right? And obviously right here we have one with a candle closure above previous candle high. Now, unfortunately, we took the swing high, so that's invalid right there. But if we keep playing price out, all right, we get a few more opportunities. Again, we're double gapping here, all right? Now on the 1 minute time frame, we also had another setup. We had double gaps here, all right? So if I just draw this lower round out, obviously harder for price to invert double gaps like we know. Now, when price comes into this level, all right, look what we immediately do. Here's our swing point. We couldn't take this other one because remember it swept the high, right? Here was our previous candle high of coming into that fair value gap, right? We did not make equal highs or sweep. We close above right there. That is where we get in our position, right? What do we have right above it? We have the Asia high. So all we need to do now is probably put our stop loss underneath the low. This is pretty tight in terms of putting it under there. So maybe just underneath here, like 30 points, just like something fixed, right? 30 points doesn't have to be fancy, like in a certain area, right? And all you need to do now is just play price out right there. Now, obviously with the little gap is a bit weird, but in terms of why this setup works, when you have that candle closure above a previous candle high after delivering from a gap, that indicates, and I've done the due diligence of backtesting this for you, right? That indicates that that fair value gap is the correct one that's going to deliver you to where you need to go, right? That's the right one to trade. That's the one that's not going to be inverse. That's the one that's going to obviously take you in the direction that you're looking to trade. That is why candle closures above previous candle highs are so important. And whether you wanted to ride this up even higher, you absolutely could have, because price was extremely bullish in general, because we could clearly see we're delivering from our high time frame. Like I said, I won't go into too much of the daily bias in this video specifically, if you want to check that out, last video. But simple narrative pre-session just gives you the understanding of, hey, I'm going to trade in this direction of the market today, right? And by doing this and understanding this, right, by giving yourself narrative and context on the day, you can catch larger moves by simply just waiting to see your strategy support your bias, right? Now, obviously, price is a little bit slow. I believe we hit target later on, something like that. Yeah, there you go, right? But again, when you have a bias, you set in stone your bias by the narrative you created, right, from your pre-market breakdown, right, finding the daily bias using my daily bias technique, and then you find a strategy that supports that daily bias. So if you're trading something like inversion for value gaps, you're probably not going to find something when price just rallies up, right? Because that's technically a reversal model, right? You have to obviously be versatile. You have to have a continuation model in your arsenal, and you also have to have a reversal model, all right? And by using this continuation model, you should be able to catch these rally ups, no problem, right? You'll be able to obviously have the right context, the right confluence, and overall catch really, really easy days like this. Now, unfortunately, I couldn't come to the stream today because I decided to break my monitor. Yes, it fell off my desk when I moved it. Unfortunately, it is what it is. So I couldn't trade. I was stuck on the sidelines today. But guess what? Me being able to teach hundreds and 200 students of this simple setup every single day gives me the opportunity to obviously have that day off now, with the peace of mind that these guys are still going to rinse the markets. You can see right here, this guy's currently on a 4-win streak, absolutely rinsing from our last week's trades, and obviously the trade today, which he caught by himself, right? And obviously over here in the chat room, we have a few other boys taking this exact setup as well, learning the concepts every single day. So if you want to join these boys, you obviously want to trade live with me every single day, take these setups, learn all my strategies, then join in the link below. Right, it's literally going to be the easiest path to success for you. It's literally just pure guidance, right? And yeah, that's pretty much it. And maybe once I pick up a new monitor, I'll get back to the stream. I'm joking. I'll be back to the stream literally tomorrow, picking up a new monitor today. So like I said, if you want to watch me take these trades live every single day, then you know where to go.